Well, India's solar ambition has a name behind it, and that name is Waaree. From a largely import-dependent power sector to a 250-gigawatt renewable base today, the transformation has been staggering. And a few have had a ringside seat and a hand in building it. Quite like Hitesh Doshi, Chairman and MD at Waaree Energy, India's largest solar panel manufacturer. With a 500 gigawatt target by 2030 in sight, a US manufacturing bet now, navigating tariff headwinds, and the battery storage race heating up. There's a lot to unpack. Hitesh Doshi, welcome to the interview with me, Aisha Faridi. Thank you so much for your time today.
Thank you. Thank you for inviting me and giving this opportunity.
Right. I have to talk about the big picture. I mean, Waaree has gone from a domestic solar manufacturer to a global energy play now. Looking back, Hitesh, what was the single decision that fundamentally changed the company's trajectory for you?
Actually, it is a reverse. If you look to our history, we started solar very early when the Indian markets were not opened. So way back in 2007, we decided to set up the production facilities to supply to the Europe and United States. And the Indian market opened up 2010 onwards. So we started the manufacturing to export and then started coming into the domestic market. And after that also, we always continued our efforts to export our products, and maybe after 10 years it has picked up very well.
Interesting. So we're at 250 gigawatts today with a 500 gigawatt target by 2030. Is the second half structurally harder, and does India's supply chain have the kind of depth to actually get there, or are there critical gaps that could slow execution perhaps, according to you?
I think every growth has some hurdles. If you look to the last 15 years journey of solar, started with 18 rupees. At that time, the issue was the solar prices, technology. But there were always opportunities. Same this time also. There are a lot of hurdles like land, grid, and other things. But what opportunity came now? The opportunity came, the prices of the solar has been reduced, a huge awareness. Even if you go to some village, we'll find on the roof, they're putting the solar panels. And another opportunity came up now is for the batteries. So whatever the power we are able to produce now in a daytime with the present battery prices and whichever way the battery technologies are going ahead, I believe that it will be as the same. But personally, if the rightly managed with the storage, the another 250 gigawatt will be easier than earlier. As the industry learned, users have learned, policymakers knows the issues now. So overall, it will be much faster, in my opinion. The time we took for 250 gigawatt to reach here, for another 250 gigawatt, the time will be much, much lesser.
But Hitesh, Tata Power, for instance, has flagged that transmission is a serious challenge. Grid capacity constraints, delayed evacuation infrastructure are real bottlenecks. How is Waaree structuring its project pipeline to try and manage curtailment risk? And is this an industry-wide problem that policy needs to solve, perhaps?
Overall, we are increasing our generation in the afternoon time when we are like a solar rich country. Across the country, we have the good radiation. The challenge we need to fix is to store this energy. And with the present battery technologies, it is possible to store. So there are some temporary issues like you mentioned about the grid and all that. But the way the battery deployment started coming up in India, and if we take it to every house, so we generate the power, we use there, we store there. The dependency on grid, if we can constantly reduce, I don't think that this will be a problem when we want to have a more and more renewable energy, and particularly during the present geopolitical issues. I think this is the best time for the country to convert these problems into the opportunities and generate the power, store the power, and use when we want.
Interesting. But Mr. Doshi, the industry is shifting rapidly towards TOPCon technology, right? What is Waaree's roadmap to maintain cell efficiency leadership over the next 5 years? And how much capex does staying ahead actually require?
Let us understand this industry. When we started in 2008, the technology was completely different. Every 2 and 3 years, we have to change the equipment. Normally, it is 3 years. And constantly, we have to go to the new technology, be ready for it, and we stay ahead always on the top of the curve. So this Waaree has been doing for now 16, 17 years. We started TOPCon, we started HJT long before it came into the mass production. And now today the TOPCon, HJT, these products are available, including the bifacials and whatever the name you call it. But at the same time, we are working for the next technologies. That may be the perovskite, that may be the various coatings on the TOPCon, back contracts and all that. So the industry we are in here, if you are not moving to the next technology, you are out of it. So for the capex, we had kept this policy for last 15 years plus to depreciate all our core equipment in 3 years. So if you look to our balance sheet, you will see this depreciation there. So Waaree is always ready as far as the capex is required to move to the next technology, and we will continue to do so.
But you know, ALMM2 is live now. ALMM3 brings ingots and wafers into the domestic content framework. What does this mean for demand-supply dynamics in the industry? And specifically, what is the margin impact on Waaree as domestic sourcing requirements tighten?
We have started this manufacturing in the country long before, you know that. And so we strongly believe make in India. And in last 15 years, we constantly invested across the industry in this. The policies of ALMM is definitely focused on the make in India. And make in India, we have seen the difference today in terms of the jobs, ancillary productions, and services in the country. So value additions does not give only the, I will say, the advantage to the solar industry, but many more like a glass, aluminum, and a huge list of services there. So we strongly believe in that, and that is what is helping the country as well as the industries to make some money there. ALMM C came, we were ready with the cell plant of 5.4 gigawatt. Another 10 gigawatt is under implementation and will reach before the end of this year for a 15 gigawatt of the solar cell capacity. Now the third ALMM which came, that is for the ingot and wafer. That is the raw material to make the solar cells. We started the work in Nagpur for the 10 gigawatt of our plant, and in next 18 months that will be also the operational. So as a company, we like to continue to invest in that, and that definitely helps to expand our margins. Same time, globally, there is a demand to decouple the supply chain from China. So we are invested into the Oman for the polysilicon, which is a basic raw material to make the solar cells and ingot and wafers, whatever it called for it. So that way, Waaree is constantly investing in manufacturing and will continue to do so.
Could you quantify, though, the margin impact?
Depends on the market condition. You know, the present situation, it has completely changed the energy prices, shipping costs. So difficult to say this number today, but definitely when you are controlling the entire supply chain, the margins in that supply chains can be captured into the final finished product.
Fair point. But tell me, solar panel prices have been in a structural decline driven by Chinese overcapacity. India is also building capacity quite aggressively. Is there a structural overcapacity risk building domestically? And then what does that permanently compress industry margins to?
Actually, looking to the policies of the country, now we cannot say that the solar panel manufacturing is the manufacturing. You need to have the complete value chain. So if you look to the value chain, we do not have the still enough capacity in the country. For ingot and wafers, now they are coming. And in future, we have to work on the polysilicon. Yes, for the solar panels, there is a capacity now. Unfortunately, setting up the capacity is not that the customer will buy the product for 25 years. So today, anything we buy, even for the personal use, we don't look to the capacity, we look for the services, we look to the performance in the market, and where you are investing for 25 years, there are many other things to be seen by customers. So in the market, it is not important the capacity setup, it is important the capacity available which customer wants to buy and which meets all the criteria requirement for the quality banking and all that. So this is a big difference today, and that is, we believe that it will continue to grow globally.
But you've made this very bold bet on US manufacturing, Mr. Doshi. Waaree has previously said that the group can effectively bypass countervailing duties. Is management still firm on that stance? And specifically, how large is your US exposure today, and what does the US growth runway look like from here?
It's not US. If you look to the globally today, I call it deglobalization during the COVID days. This is continued. Every country wants their own energy. They want the make in their country. And the energy security demand after this present situation also that has been constantly increasing. And we understood this well during the COVID, that is the 2023. We made up our mind that it is a time now we have to start the production facilities in US. And almost 18 months back, we started the production in the United States. We got a very good response. We started with the 2 lines, 1.5 gigawatt. Based on the orders, there was opportunity for us to acquire another unit in the United States. So we acquired another production facilities. At the same time, we started the expansion of our facility, which was started by us. And in next 6 months, we'll cross 4.5 gigawatt plus the facilities in United States. So you can say it was a bold move, but if we get the opportunity where we are seeing there is a market for Waaree, there are the credentials, customers demand. We have jumped at the right time, and today it has settled very well.
But tell me, what makes Waaree 2.0 different from where the company stands today? And what is the group's plan to move beyond solar panels into end-to-end energy solutions, including inverters, transformers, T&D? And what is the strategic rationale for each of these adjacencies?
Thank you for capturing a 2.0 of Waaree 2.0. And I think you read our presentations recently we have given in the investors conference. Waaree is moving into the entire energy transition space horizontally. So we started with the solar panel, we came up in the batteries, inverters, transformers. Like that, whatever the products are required, transmissions, these are all the products, either we are investing in these companies or we are starting ourselves from the scratch. At the same time, we are going vertically and horizontally. For example, for solar panels, we need solar cells, we need ingot wafers, polysilicon. And when the solar panels are made, we need an infrastructure to put it, we need the grid connections. So vertically and horizontally, we are growing for the last 4 years. So Waaree is moving from a pure solar power play to the complete energy transition business. Unfortunately, the response from the customer is very good because the entire focus is on the same customers, and we are looking to that how we can increase our market share, or you can say our purchase power what they have for all the products from the Waaree. So keeping the same customers in focus, our nation has moved a lot a pure play from a solar module to the many other products in this energy transition.
But battery energy storage is still the missing piece, Mr. Doshi. Solar without storage is an incomplete solution. Where exactly is Waaree placing its bets? What margins do you expect in the BSS segment at scale? And what is the realistic timeline to get there?
The BSS has various components. First is like assembling the battery cells, converting into the pack and putting it to the container, and that is called the BSS. Being a core manufacturing, we thought why not to start with the battery cells, which is the most complicated and captive industry in the entire value chain, and where the large investment technologies, all this is required. So we started with that. We started the plan of a 20 gigawatt. Out of that, the phase 1, 4 gigawatt solar cell production will start in next 4 to 5 months. And that is a core. After that, we already have the packing, assembly, and containerization plant. So you can say before the end of this calendar year, we'll start offering a complete BSS as a Make in India. Same time, our additional 16 gigawatt work we have started. In that, we are going ahead with the additional things like anode, cathode, electrolysis, whatever is required as a raw material to make a solar cells. So right from the raw materials to the final BSS, we'll be able to offer from December and the entire value chain in next 15 to 18 months. So that way you can say it's a large investment, because we strongly believe that the solar power has done its work. It has already reached to the 2 rupees 50 paisa to 2 rupees 70 paisa power price with the present interest rate in our country. Now it is a time of the storage. If we can get right to the storage and start offering a long duration storage along with the solar, I think we will not need any other kind of the energy source.
But Mr. Doshi, as I look at Waaree 2.0 or even beyond, right, the EV transition, phenomena is creating a second wave of energy infrastructure demand. Is that an adjacency Waaree is actively pursuing, or is the solar and storage opportunity largely enough to stay focused?
We are going to make up batteries. Now these batteries can be used, a cell we call a battery cell. So battery cell can be packed in a various formats, and you can put whatever the battery management software you want to put it. So you can use the same battery in a various applications. Of course, we'll focus on the EVs and the solar together. But apart from that, thousands of applications today we see in the batteries we are using in a day-to-day life. So we are going to make a cell, and cell can be used across the industries, and we'll focus in all these industries.
Interesting. I want to talk about the quarter gone by as well, because your EBITDA margins over there have contracted despite top line growth. Walk me through what drove that compression, and more importantly, what is the path and timeline for margin recovery as you see it?
As we have informed also in our last year's presentation, we have given the numbers knowing the uncertainty is a part of this business. Recently, we have seen the supply chain issues, increase in the raw material, and the availability issues today on time of the raw materials, which has definitely impacted us in a quarter 4. But this was very well thought when we have given our expected numbers starting of the year. So compression in some quarter, it will be there. Some of the quarters, it will be recovered. But normally we plan for the whole year. We don't look to the quarter on quarter, because this is a part of this industry where probably when there is too much rain, the installations will go down. And again, they will recover in the next quarter. So overall, we have given the approximately, you can say, our estimation for this year, and we will definitely will be there.
But by when do you see a margin recovery? Would it be in the second half of the fiscal?
I think so. I think so because I hope that uh, these issues of supply chain, the prices of the commodities and energy prices will little bit in the second half of this year should be stabilized. At the same time, the customers are now ready to understand these cost impacts, and customers also giving us the better realization. So it's working on the both the side. So I'm not putting only on the side. Now we are going back to the customer and customer accepting our request, and the things are changing now.
But you're guiding for approximately 7,500 crores of EBITDA, and that's a good 25% growth that we're talking about. Break it down for our viewers and your investors watching this interview. What, according to you, would be the key drivers or levers for this? Would it be volume? How much is mix? How much depends on margin recovery?
Definitely there will be a volume. That's number one. Number two is we are constantly increasing our production capacity in a solar cells. Our other investments in EPCs, transmissions, batteries, they will also start generating the numbers. So if you look to the capex of close to 30,000 crore, it is not coming together at a time. Every 6 months, some of the plants are coming to the operationals and revenue starts coming from there, and that will help us to achieve our estimated EBITDA. So it's a mix of volume, mix of the backward integration, starting the production from the new investments. So it's all together. I cannot say it's only one or two items. And this will continue for next few years, since every 6 months or 3 months, new production facility is coming up into the production, and it is helping to increase the top line and bottom line.
To your point, Mr. Doshi, about the committed capex, some have been very critical and flagged off core credit risk. What gives you the confidence on timelines, and what is your target net debt to EBITDA through this cycle?
The projects doing on times are the definitely issues, but if you look to the history of Waaree, the execution has been our key focus, and from a capacity of less than a 30 megawatt, today we are at 28,000 megawatt in the solar panels or solar cells. The way we are executing, of course, there has been a lot of learnings, a lot of challenges, but we are quite confident that we'll start these production lines as a plant. Coming back to the on a date side, we have been again a conservatives. So far, if you look to the balance sheets, our net debts are always very minimal or close to the zero. As a company, we normally keep a target of the ratio of 0.5 to our equity of the debt. And that probably will continue whenever it is required to be choose time to time.
So there's silver prices, Mr. Doshi, there's polysilicon, there's commodity inflation. How exposed are Waaree's margins profile to input cost volatility, and what hedging or backward integration steps are you taking to try and structurally reduce this kind of exposure and vulnerability?
We definitely hedge, like we hedge a silver, we hedge a dollars, but still, like when we are making our estimates, we call internally the old Harvard word called a VUCA. So it's a volatility and uncertainty with the complexities. This is a part of the world we are today, and that we have constantly, every day we have to think. 2 days back, a silver price and today's silver price. This makes a different scenario for the production cost of the solar cell today. And this is a part of the business now. We have to make sure every day we are navigating in this and having a proper hedge all the time.
Interesting. So, lastly, I want to talk about cell ramp up, capex execution, margin recovery, grid evacuation, commodity inflation, US tariff uncertainty. There is a lot on your plate right now. But which of these issues keep you awake at the night the most, and why?
The business we are in for last 15, 17 years, when we started investing in the solar in 2007, the price of the solar was a 400 watt, 4 rupees a 400 watt. And the crisis came with the Lehman Brothers, you know that. And the prices came down to 178 rupees. So our first invoice has been made at that price. So from that day till today, this is became like a daily work. So nothing keeps me awake. It is like a more, are we doing our job properly during the working? You have to make sure that it is taken care and you are ready for the tomorrow's next challenge. And when the mindset always is to grow the organization and you constantly focus on the growth, your numbers, which we have been constantly looking for last 10 years. I think these things doesn't keep us awake anytime.
Yes, to more peaceful nights and better sleep. Mr. Doshi, thank you so much for your time today. Great speaking with you.
Thank you. Thank you for giving this opportunity. Thank you.
Thank you so much.